one of my most respected liquidity providers, very closely associated to the Russian-Chinese markets, sees the Russian-driven BRICS chairmanship driving Glazyev's gold-backed commodity currency forward. This currency, as it gets brought forward, they're estimating that $3,000 is the bottom of the range assessment. It's not that the dollar gold price is actually rising at all. It's actually that the purchasing power of the bankrupt, debt-laden dollar and all the related fiat currencies is en route to slipping to zero against gold. There'll come a point where no amount of dollars will actually buy an ounce of gold.
The U.S. national debt, inflation, and the potential for an emerging currency that uses gold to derive value could cause the bull market to climb to higher highs over the coming years. A BRICS currency should be a bullish development for gold and gold-related assets. BRICS countries. Russia, India, and South Africa have been steadily buying the precious metal for the last 14 months. In fact, the largest buyer of gold in 2023 was the BRICS alliance, reported the World Gold Council. AndrewMaguire, an independent London metals trader, sees gold's positive outlook in 2024, pointing to Russian-led BRICS initiatives and de-dollarization. The expectation is that a gold-backed currency could drive gold well beyond $3,000. CNBC financial experts predict a substantial increase in gold prices, projecting a rise to $5,000 per ounce. Current low prices back it to the Federal Reserve's interest rate hike. They anticipate that the economic downturn will force the Federal Reserve to reverse its rate hike and reinstate gold as a less risky asset. Meanwhile, Maguire notes that gold faced initial resistance but started 2024 robustly at $2,784, surpassing its 2023 opening by $254. Gold prices surged 13% in 2023, their first annual rise since 2020, and are forecast to reach record highs in 2024, with lower interest rates reducing the opportunity cost of holding non-yielding bullion. Central banks, sovereigns, and institutions embraced gold over U.S. Treasuries. Maguire suggests central banks are gearing gold revaluation, foreseeing prices over $2,500 by the fourth quarter of 2024. The central bank's gold acquisition spree is more than a mere financial trend. It's a calculated response to the evolving geopolitical landscape. The World Coin Council's report highlights this unprecedented surge in gold buying as a direct counter to the BRICS bloc's push away from the greenback. In 2024, Basel III NSFR compliance is key, forming the foundation for spot gold markets with a tenfold scale increase. Now we present the clips of Alasdair Macleod's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Yeah, Shane, and it's really worth stepping through this. With spot gold opening up at, actually it was 1824 was the, of course, these things are burned in your mind because as we move into a new year, you want to see where we're opening and really what we're projecting to be, where we would be going. And we'll be looking at that again for 2024. But on the it was at 1824 on the first trading day of 2023. Now, Basel III NSFR compliance became mandatory on that very same date. Now, this meant that for the first time in history, the liquidity providers operating in the global foreign exchange markets were forced to back their spot gold offerings one-to-one backed by physical gold. Now, huge difference. The deliberately unreported 2023 physical gold compliance changed the gold price suppression game as gold began to be sought by central banks, sovereigns, and institutional traders seeking an alternative first-tier asset class that directly competes with US treasuries. Now, despite a year of official pushbacks, right on cue, just as we expected, gold finished strongly above $2,000, fixing at spot $2,078.40. Now, that was $254, over $254 higher than the 2023 open. Now in 2024, and this is the reason we're going through this, well-established I mean, Basel III NSFR compliance is now locked in and fully complied. And it's underpinning this 10 times larger the spot gold markets. And gold, having been reclassified as real money, that the real money it is, provides every other global central bank and sovereign entity a perfect, live, tradable foreign exchange de-dollarization instrument. Now, this is going to be the story of 2024. And let's kind of look why. Every global South central bank, bar none, as well as European and Asian central banks, are positioning to revalue gold. We'll look closer at the process as the weeks play out. But one thing is clear, as it was at the commencement of 2023, really, that in spite of official gold market interventions against the dollar, gold would have to be revalued literally hundreds of dollars higher. And now it's inevitable that by the fourth quarter of 2024, spot gold will be over $2,500. And most of the same liquidity providers that predicted over 2,000 spot for the end of 2023 are now gravitating closer to $3,000 per ounce. In fact, one of my most respected liquidity providers, very closely associated to the Russian-Chinese markets, sees the Russian-driven BRICS chairmanship driving Glazyev's gold-backed commodity currency forward. And given that, and people are not expecting this, it's been poo-pooed by a lot of people, but this currency, as it gets brought forward, they're estimating that $3,000 is the bottom of the range assessment. It's not that the dollar gold price is actually rising at all. It's actually that the purchasing power of the bankrupt, debt-laden dollar and all the related fiat currencies is en route to slipping to zero against gold. There'll come a point where no amount of dollars will actually buy an ounce of gold.
According to AndrewMaguire, there's a significant shift in behavior among commodity trading advisors, CTAs, as they move from paper markets to embrace gold as a concrete alternative to the U.S. Treasury. You can physically hold your gold bullion and exchange it practically anytime and anywhere. Thus, your gold coins or bars remain an accessible, tradable commodity, even in a scenario of total economic collapse. In 2024, Maguire highlights commercial insiders strategically pulling bids in the silver market, luring CTAs into selling positions within a bear trap. With silver spot price trading below the 200 DMA, the first support is seen at $23 a troy ounce. A breach of the latter will expose the January 11th low at $22.48, followed by the $22 mark. Once that support level is broken, the November 13th cycle low of $21.88 would be next. Let's get back to the interview.
Hence, going through it. Now we do predict, I'll look at those in a sec, but we do predict the Fed will be forced to fold their naked short gold hand by the end of the second quarter, and very likely much earlier. Certainly, the moment any central bank leads the pack to revalue gold, which could happen. So, looking at these two conditions, following extensive meetings with our wholesale contacts, these are the two things that stand out the most. The first one being, it's not gone unnoticed that the concerted, officially driven paper market year-end rinse efforts had once more run into headlong into the sticky component of the CTAs that we had identified, who are increasingly turning to gold as a real asset first-tier alternative to US Treasuries. Now, that was something that was unheard of. And while the sticky component, and we're talking about the paper guys in the COMEX here, and while the sticky component of the House issued non-delivery futures market, long gold market open interest, i.e. the chips, that appear just as technically rinsable into the price-rigged dips below, their entry points, these real asset hedges are sticky and will not trigger the intended margin calls the House requires to gain downside traction. This is a change in behavior. And these borrowed, undeliverable COMEX long positions have been employed by an increasing percentage of these CTAs to do the job they were sought to do, namely providing an alternative asset class to hedge projected de-dollarization flows alongside alternative asset class alongside hedging their higher risk investments, all of which without exception are backed purely by debt. Industry apologist Jeffrey Christian suggested in the past that it's closer to 500 ounces of silver traded for every of futures traded for every ounce of silver. I mean, what kind of a nonsense is that? And with that in mind, I just wanted to apply a little color here. That in mind, let's look at the action in silver as we started 2024 trading. And assisted by some strategic COT bid pulling, commercial insider bid pulling in silver, primarily the liquidity, the swap dealers. Unlike gold, insiders managed to trick the CTA's bears into close silver low to successfully chart paint a bearish monthly end of year close in 2023. As a result, CTAs once again got sucked into this bear trap, which they are in now. However, given the paper-centric action rails against the largest Indian and Chinese silver buying in 2023 and follow-through buying in 2024, the commercials have actively been setting up this bear trap, tricking these derivative traders into follow-through selling into news events such as non-farm payrolls, and just as physical demand picks up in 2024. The option structure actually reflects this bear trap, as it once again, this is the same way as it was in October, November, December. The CTA spec group controlling close to 80% of the open interest, who've bet against the market-making insiders who are tricking them lower by strategically pulling bids, not going short, just pulling bids at the correct places at the pivot points. They've taken the long side of these option bets against them. And guess who's going to win this bet yet again?
The WGC released a report in May indicating that 24% of central banks worldwide intend to increase their gold reserves within the next year, driven by growing pessimism towards the US dollar. How might this evolving relationship between gold, central banks, and the BRICS alliance impact your investment decisions? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.